We're here today on RealAgriculture.com. We're with Mike Jubinville. He is the owner of ProFarmer Canada. Welcome today, Mike.
Pleasure.
Okay, Mike, let's talk about the feed barley market. A lot of feedlot operators are talking a lot about the volatility we've had over the past 2 years. You know, what can we expect going through 2010?
The volatility certainly has been a key factor in grain markets generally the past couple of years, and I'm kind of of the two and two philosophy. 2 years up, 2 years down, 2 years sideways. Now we've had an enormous run up in 2006 into 2008 and an equally dramatic fall off from 2008 into 2010, and I think we're in the process right now of starting to carve out bottoms, starting to find ourselves new trading ranges than existed before. And I don't think when we've gone through periods of supply excess that we've had in cyclical periods of the past, where we've had Lethbridge cash feed barley prices drop into that as low as $100 to $115 a ton. I don't think we see that anymore. I think we're trading new ranges now, and those ranges have now been elevated. So I think we're starting to carve out that sideways trend as we go through 2010, and it's going to be a period of time, I think, in agriculture, at least from a grain producer's point of view, where there's going to be points of time where you're going to be able to lock in a profitable opportunity. Other times, it's going to be a struggle, and I think that's the near-term outlook. Longer term, I'm actually quite optimistic when it comes to the grain markets and livestock markets down the road. I think as we get further along into the economic regeneration of the global economic community, we're going to create an inflationary environment that I think is going to be positive for commodities in general, on the meat side, on the grain side, on oil, gas, gold. We also have an optimistic outlook in my view, but that's going to take place probably deeper into the 2011 and 2012 period.
So do you think 2010 is going to be a year where you've really got to take advantage of swings in the market that are to your liking, or is it what kind of year can we expect?
I think this is the kind of year, outside of a dramatic negative impact on production if we have a drought, or we have crude oil run up to $100 a barrel, or the US dollar collapses. Outside of those kinds of things happening, which I don't envision, I think we're sort of going into a sideways trading environment. And so in that kind of view, farmers are going to have to look at short-term opportunities as potential pricing points for various commodities. And in the grain markets, I think we're probably going to be in a period of whether it's 4, 6, 8 week periods where we're going to trend up, and then 4, 6, 8 week periods where we trend down. And it's going to be that kind of environment, I think, until some new fundamental catalysts come to light to give us the next momentum. And I suspect down the road, in a more inflationary environment, they'll probably be higher.
Yeah, and we're just about getting close to the time where we're going to have seeders out in the field, and by the sounds of it, talking to a lot of farmers, barley is definitely not the first choice on the farm. You know, that could have an impact on prices as well.
It sure is. Cereal options, if you stack it up relative to what anticipated new crop returns, say for next fall, or whether it's durum, whether it's wheat, whether it's barley, sure stack up pretty poorly right now relative to other cropping options. Nothing is making the farmer a ton of money in today's environment. But those cereal grains tend to be ones that are at the lower end of the scale, and we're probably going to lose acres on those categories. Is it enough to impact price? Probably not in the right-of-way period, because something like barley has a lot of substitutable products. You're starting to see a lot more of an oversupply of durum and spring wheats that are taking the place of barley, as well as U.S. corn and distillers' dried grain that's coming across the border. There's an opportunity for short-term jumps to the upside, but a sustained turn higher in barley is probably not in the immediate cards, because we just have those substitutable products where there's large volumes, and that's going to take the place of barley.
Thanks a lot for joining us today, Mike.
Pleasure.